Alright, for this video I want to go over the child tax credit and how it's claimed by grandparents that have custody of their grandchildren. So I've got one slide here outlining some of the rules and the fact pattern we're going to look at, and then we've also got the Schedule 8812 for the CTC, and it is part of the full Form 1040 for the grandparents. So we'll go through all these pieces, talk about their income, and how they go about claiming the credit. And then we do have the Schedule 8812 form instructions available for 2023 as well. So if we start with the slide here, the child tax credit for 2023 is $2,000 per child. And it's for children that are dependents and they're under 17 at the end of the year. So if your child turns 17 on the last day of the year, you don't get this credit, right? They have to be 16 or younger. Now, the additional child tax credit, which is the refundable portion of that $2,000 CTC, is currently a maximum of $1,600 for the year. It was $1,500 in 2022, so it's been increased by $100. But there are some pending changes in Congress right now, so this bill, the Tax Relief for American Families and Workers Act, just passed the House. So now it's on to the Senate, the committees, and then a vote in the Senate, and then potentially up to President Biden for his signature. So it's not law yet, but it likely is going to get passed. We just don't know when. And this is going to increase the refundable portion of the credit from $1,600 to $1,800. And it's going to also increase the overall limits for taxpayers that have more than one qualifying child. And these changes will be made retroactively. So even though it's 2024 and we're doing our 2023 returns, if this gets passed and signed into law, these changes will apply for 2023. Now, what is a qualifying child for CTC purposes, and how does it impact the grandparents? Well, it's the same tests for the parents of the child. It's just that the relationship test is a little different here, but it's very broad, right? So the relationship test, we see that in order to qualify, the child has to be either your son, daughter, stepchild, or foster child, but it can be all of these other options too, right? You could have a brother, a sister, or any kind of descendant of one of these persons can be your qualifying child and meet that relationship test. And this includes grandchildren. So because grandparents obviously have their own kids and then the grandchildren are descendants of them, that means they meet the relationship test. So assuming you meet all these other requirements as a grandparent, you can claim your grandchild as a qualifying child for purposes of CTC. Right, so let's look at our fact pattern here. We have Jane and John taxpayer. They're both age 65. They're married and filing a joint tax return. Now they have full-time custody of their grandchild Bella, who's age 8, and she lives with them 12 months out of the year. Now Jane and John are both retired, and they receive income during the year from Social Security payments, 401k, retirement distributions, and they have other investment income. Right now, so Bella is going to be their qualifying child for dependent purposes and as well as the child tax credit purposes because she meets these other elements, right? She's under 17 at the end of the year and doesn't provide more than half her support. So the another note here, as we'll see on the return, right, because these taxpayers are age 65 or older, the standard deduction increases for them, right? So if you're 65 or older, you get an extra $1,500. So the standard deduction for married filing joint returns is $27,700 for 2023, but we're going to tack on an extra $3,000 because both spouses are over 65 years old. All right, so let's have a look at the return here. So if we start with page 1, just to get a sense of their income. So we've got Jane and John up here. They're married filing joint. And we've listed their grandchild, Bella, as their dependent, right? And so we've got the relationship noted as grandchild, eligibility for the CTC. And we are checking under the age option here that both the taxpayer and the spouse were born before 1959. Now, on the income side, we see here lines 1A through 1Z, we have no earned income. So what that means is we're not going to be eligible for the additional child tax credit, but the CTC is still going to be available so long as we have some taxable income. So we've got some interest income here on line 2B. Line 5B, we have their 401k distributions, $26,300. And we can see here on line 6A, their total Social Security distributions for the both of them totaled $32,832. Now, the taxable portion of Social Security was calculated at $58.98. So I won't go into the calculation in too much detail, but there is a worksheet where you can figure how much of your Social Security benefits are subject to tax. This largely depends on your filing status and how much other income you have. Right? So the more other income you have from investments, 401k distributions, that is going to increase the amount of your taxable benefits. But for the most part, for most taxpayers that are only living on Social Security, the Social Security is completely exempt. Now, on line 12, we see that standard deduction of $30,700. So their profile here shows taxable income of $2,578 and total tax on that taxable income of $259. So now that they have taxable income of that figure and $259 of tax, how much child tax credit can they actually claim? So if we look at the Schedule 8812, we'll start at the top here, right? So line 1 is their adjusted gross income, $33,278. They don't have any adjustments here from foreign earned income exclusion, no income in Puerto Rico. So the $33,278 remains unadjusted. They have one qualifying child under age 17. And so we multiply 1 times 2,000, and it gives us $2,000 of eligible credit. Now, the phase-outs here, married filing joint returns, so long as your income is under $400,000, you can potentially claim the full $2,000 credit, right? It's only after $400K does the credit start to phase out. And then at some point it's phased out completely. So they're well under that limit, right? Their income is $33,278, so no phase outs required here. So $2,000 is the amount of credit that we're potentially working with. So now the question is, how much of that credit can we actually claim? So they're asking on line 12, is the amount on line 8 more than the amount on line 11? And the answer is yes, right? Line 11 is 0. So we have yes, we subtract line 11 from line 8, and then enter the result on the credit limit worksheet. So the credit limit worksheet is designed for us to test how much of the child tax credit we can actually claim. The amount of tax coming through from page 1, line 18 of the return, sorry, that's page 2, line 18. So if we look at page 2, line 18 is $259. So $259 is the total amount of tax we have. We don't have any other credits to account for that were on Schedule 3. So the credit limit worksheet means the maximum amount of non-refundable child tax credit we can claim is limited to $259, right? And that's because the amount of credit from the child tax credit is non-refundable. Right. If you want more information on how this works, you can look at the Form 8812 instructions. Right, they've got a section here that kind of highlights it as succinctly as possible. Right, I mean the maximum credit of your CTC may be reduced by either of 1 or 2. So as it notes here, right, if the amount on line 18 is less than both of the credits, it can be reduced. If the amount on line 18 is 0, you can't take either credit because there's no tax to reduce. And so in our case here, we do have some tax. So we have $259, so we can take $259 credit. So that's what's reported here on line 13. And then we have smaller of line 12 or 13, so $259. So on their page 2 of their 1040, they've got the tax of $259. Line 19, we report the credit of $259. And so we see here it eliminates all of their tax liability for the year. So of the $2,000 credit, they were able to use $259, right? The excess there is lost, at least at this point. So then the question is, well, can we claim that additional child tax credit? So the additional child tax credit is the refundable portion. That's completed in Part 2A here. The starting point is to figure out, well, how much credit was available, how much did we reuse as the non-refundable portion. So we have subtract line 14 from line 12, subtract line 14 from line 12, and that gives us a difference of $1,741. The maximum credit for the year as of now, $1,600. Now, this is something that's trying to be changed in that bill, right? When that gets passed and signed into law, this amount will increase to $1,800. But here's the stop for the taxpayers, right? So these are retired taxpayers. They don't have any earned income. So on line 18A, where you would report your earned income, this is what ultimately results in a $0 limit. So they can't claim any of the additional child tax credit because they have no earned income reported on line 18A. And furthermore, it would have to be greater than $2,500 anyway. So you don't only need earned income, you have to have earned income greater than $2,500 in order to make this work. If you want more information on what's factored into the earned income, if you go back to the 8812 instructions, there is an earned income worksheet. And so you can go through this worksheet and it will highlight which items and from what parts of the return you can pull that would be factored into that amount. So the starting point here, the easy one, is always what is the amount from line 1Z of your 1040. So we just looked at that amount earlier, right? 1Z is a total of all of these amounts, 1A through 1H, right? So on 1Z we have none. So line 1A is 0. We don't have any non-taxable combat pay received. On line 2, we are not a statutory employee, right? For Schedule C, we're not an employee at all, right? So we're not an employee, we're not a statutory employee. Enter net profit or loss from Schedule C, right? We're not running a business, we're not self-employed. We don't have any Schedule K1s, so no income here that would apply. Schedule F for farming businesses. We're not operating a farm. We have no farming income, right? So when you get to the bottom of this, you'll notice that, well, if you didn't have any of these items, you're not going to have any earned income. And so, again, we circle back to the issue of if you don't have any earned income, you're not going to be able to claim the additional child tax credit in Part 2A. All right, so that covers it for this video. I hope that was helpful. In short here, the taxpayers do get to claim the child tax credit. So if you're grandparents and you're retired, and this is your only income sources, as long as you have taxable income, you are going to get to claim some of the credit, but maybe not all of it. It just depends on how much income you have. Now, if you're not retired and you're still working, then you might be eligible for not only the child tax credit, but you could get this additional child tax credit too, because you might still have some earned income that you can drop into box 18A. Okay? All right, so again, that covers it. Thanks for watching. And as always, I look forward to seeing you on the next video. Thank you.